free to take pictures and use social media during the meeting. Can I ask, though, that everyone present turns their mobile phones to silent or vibrate whilst the meeting is in progress? Please be aware that this to take pictures and use social media during the meeting. Can I ask, though, that it's always worrying when you hear yourself back. I'll just keep on going. Please be aware that this meeting is being live streamed and that a recording of the meeting will be available to view on the County Council's website. There's no fire alarm test scheduled for today, so if the alarm sounds, please leave by the nearest marked fire exit, which is towards my left-hand side, through the middle doors on my left, and assemble in the car park. We have a number of people watching on Zoom. What I would like to do is allow Dawn to show herself, if that is possible. Dawn, as you have, she's obviously very shy. Dawn has already moved to Wales and has supported us since 2021 and is retiring shortly after 22 years with the County Council and its predecessors. So I think that is an amazing achievement, Dawn, and congratulations. And I hope you enjoy yourselves in Wales. I will now pass over to Rishenda, who has big shoes to fill, for you to tell us whether we have any apologies.
Thank you, Chair. So apologies this afternoon from Councillor Ambrose Smith, who is substituted by Councillor Gardner. We understand we may have apologies from Councillor Whelan, and apologies also from Mohammed Hussain, the independent co-opted member.
And Sarah Brown has just told me that Emma Larkham is on leave this week, so she is also not able to come. The next item is pecuniary and non-disclosable interest. Does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest? No. Next item is the minutes of the meeting held on the 30th of May 2024 and the action log. Members, we are being asked to approve the minutes of the last meeting on the 30th of May 2024 as an accurate record. If any committee member wants to raise a question on the accuracy of the minutes only, can they do so now, please? I see no objections, so we'll take that as carried unanimously. And I will sign the minutes for Rishenda later on. We move on now to the action log. Are there any comments or questions on the action log, Jeff?
Thank you, Chairman. Yes, good afternoon. And inevitably, I just want to pick up something on the Section 106 internal audit report. That's item 169, page 19 of the agenda. Delighted to see that there have been systemic changes being implemented as a result of the internal audit. But one of the things that I think was going to be looked at was, well, I think it was item 7 on the internal audit report, but specifically, have we been able to identify whether there are any uncollected Section 106 monies, either directly from developers or indeed from district councils? Because I have been, I don't know how accurate it is, but one or two of my councillor colleagues have suggested that the councils themselves may be sitting on Section 106 monies that are due to come to the county. Now, so it's safe, it's collected, but it's sitting in a pot that we don't necessarily have immediate control of. Now, I don't know how accurate that is, but that's what 2 councillors have told me.
Michael, would you like to comment?
Yeah, thanks. And through you, Chair. I'm not sure that's specific to the action log as opposed to the reporting that we will do through the IFMR to strategy resources. and Performance Committee that will then pick up this reporting, and whether there is a question to come through the statement of accounts session in terms of the reconciliation of Section 106 to the notes of accounts.
It was, sorry, I think it was identified as a risk item. Perhaps that we were not able to. Well, I can look it up. It says fund collection deficiency, track the percentage of Section 106 successfully collected with. So it was within that audit report.
Yeah, and so the audit follow-up and the audit, the action here is that it will be reported through the IFMR report. So in terms of the next IFMR report, sorry, Integrated Financial Monitoring Report, that will go to September SRMP, and that will pick up the statement position. So I'm not able to answer the question here today, but through that committee reporting.
Eric. Whoops, I think I'm just asking, is it being looked at? Is that something that is being pursued? That's really what I want to know.
And I can confirm that is being looked at through both internal audit follow-up actions and the board that's noted there, and the IFMR reporting.
Okay, so we look forward to seeing the IFMR report that goes to strategy and resources, or those of us on strategy and resources. Okay, any other comments on the action log? No, so we've noted the action log. We've received no petitions or public questions. So item 4 is the draft Cambridgeshire County Council Statement of Accounts 2023-24. And can I ask Stephen Howarth, Head of Finance, to introduce this item? Stephen.
Thank you, Chair. And I think I'm joined on Zoom by my colleague Michelle Parker if there are any particularly technical questions. So this report presents the Council's draft statement of accounts for the financial year 2023-24, which were published by the statutory deadline of 31st of May on the Council's website. As the overall financial accounts for the Council, they represent all the Council's activities that the Council has been involved in that year, including group accounts consolidating the pension fund and this land limited, and they're prepared in accordance with CIPFA Code of Practice on Local Authority Accounting 23-24. So I appreciate, therefore, that it's a very long document and also quite technical in places. The covering report tries to summarise the key highlights from the core statements, and the narrative report within the accounts as well provides a good overview for people. So I'll briefly touch on the core statements now and then a couple of other items. So the Council's balance sheet shows an increase in net assets of the Council in 23-24, predominantly as a result of increased property valuations and decrease in liabilities relating to the pension fund. Both of these are more technical or theoretical in nature and are consequently balanced by an increase in unusable reserves. The value of borrowing on the balance sheet increased by around £40 million, reflecting the Council's capital programme requirements. The total comprehensive income and expenditure statement shows service spend and income for the year, as well as other items. Changes in those more intangible items I mentioned just before there predominantly drive the Council's net income position on its total comprehensive income, though with quite a bit less distortion provided by pension fund changes than we had in the previous year. It's worth noting that in this statement, a net income position is shown on the provision of services compared to a small overspend in the management accounts. Much of that relates to the timing differences of income and when it's required for spend, and consequent earmarked reserve movements in the management accounts. The movement in reserve statement itself shows that usable reserves decreased by around £37 million in the year, £10 million of which related to planned changes to earmarked reserves, and the balance being allocations of capital grant reserves to fund planned capital expenditure. So finally, on the core statements, the cash flow statement sets out how the technical total surplus on provision of services translates into a real decrease in cash and cash equivalent that the Council holds, but ultimately that reflects our improving treasury management practices and having the minimum prudent amount of cash on hand while using surplus cash to reduce borrowing. So as well as the core statements, there are 41 notes to the accounts, I think, and the core statements are then replicated in the group accounts with further notes, but I won't go through those in any detail. Reflecting the ongoing nature of work on these accounts ahead of the audit, the report sets out that one material error so far has been identified by the Council's finance team, set out at 3.4 of the covering report due to a simple administrative error. Following publication of the accounts on the website, the statutory public inspection period commenced and that ended last week. One objection to the accounts was seen in that same statutory window, which is with the external auditor now for consideration. These accounts are then subject to audit by KPMG over the early autumn. As the report states, with the ongoing national issues with local government audit, we are not expecting a full unqualified opinion from the auditor by the statutory deadline. So I'll also just briefly update the committee on, there was a written ministerial statement today that's confirmed some updates from the new government on proposed backstop dates for getting local authority accounts audited. They were raised by the previous government, and then there's been a bit of a hiatus while the general election took place. But in particular, that statement confirms a proposed backstop date for 22-23's accounts would be the 13th of December this year, with disclaimed opinions where that backstop date is not met. So that's for the publication of fully audited accounts. So it proposes then shifting back the deadline for publishing draft accounts from the end of May to the end of June for the next 4, I think, set of accounts. So I'll leave the introduction there, Chair, but just to place on the record my thanks for the expertise and really hard work of members of the corporate finance team who are mainly responsible for us having a full set of draft accounts on time. But thank you.
Thank you, Stephen. And can you pass on our congratulations as well for you and to Michelle and your team for producing these draft accounts on time. As we've seen, it's a phenomenal amount of work and they are extremely complex. So I shall be interested in views of people around the table, but thank you for all the work that you've done. If I could just pick up on one point you raised, you mentioned one objector. Is there any information about that objector that you can share or that Sarah can share, and the nature of the objection that has been lodged?
Ultimately, the correspondence is from the objector to the external auditor. We're just copied in. So I'll leave it to Sarah if she would like to comment at all on that.
Thank you. The objection that we've received, we're just working through. From what we can see, it does repeat some previous objections that have been made to the council, rather than necessarily being completely new or unique to this current year set of financial statements. So one of the things that we'll be determining is whether it actually meets the criteria of an objection for this year's financial statements, and whether therefore we have a statutory duty to respond to that objection. It was only received on, I believe, Friday, so the last day that it could have been received. So we've actually got an internal call about it on Friday. So we'll keep obviously Michael and the committee up to date as we look into the further detail. There's a lot in it, so we obviously need to take our time to go through.
Okay, Jeff, is it related to this?
Thank you, Chairman. There's a couple of sort of fairly major,
Sarah,
not sort. Sorry, what am I? Sorry, there are a couple of major decisions about to be made in the next possibly couple of months. They've been cooking away for some time, and they will come to a head or crystallize very, very shortly. I'm not going to go into the details of what they are, but they're the sort of issue which would certainly, in my view, warrant a post-balance sheet event statement or a statement of contingent liability. Can I ask, what is the latest time that you would expect to be able to cut off and not need such a statement, or what is the latest date on which they can be included? I think that they're quite important. I'm sure that all colleagues around the table think they're important, and I think it will be very important in the context of transparency and prudence, depending on the way that the decisions are actually made and the outcome, of the decision. But they are quite significant in terms of the operations of the council. Thank you.
I think just to be clear for the purposes of the minutes, that the objection is one thing, and clearly the deadline of objections was the 25th of July. So we're not expecting that we'd we'd be able to receive anything beyond that time. In terms of specifics around subsequent events and post-balance sheet events, we would consider post-balance sheet events up to the point that I sign the audit opinion. So we would consider which is going to be later in this calendar year, given the disclaimed position and the backstop date. We're not expecting now that to be before the 31st of December. Whether or not what you're talking about meets the definition of a post-balance sheet event would obviously depend on interpretation of accounting standards, and whether or not it's a disclosure requirement or an adjusting. Again, I would need to see the detail to understand, but we'd certainly consider it right up to the point of the conclusion of the audit.
Okay, any other comments? Chris, you normally got comments on the accounts. Alan first, he's put his hand up, and then you can think about it.
Kick off. Just a couple of things. Initially, anyway, it mentions. We're looking at page 47, I think it is. Where the council's cash and cash equivalents have decreased from 23 million down from 91.5 at balance sheet date last year to 68.5. Yet the short-term loans and the long-term loans have gone up. Short-term by 23.5 million and 31.5 million, and long-term by 9.3 million. I just wonder, because it does mention, I'm just trying to find it, that we've got a lower cash balance because we've paid back debt. And then probably touching on that is the net current liabilities have gone from 90 million up to 145 million. So I just wondered if there's any underlying, or is it just the timing of those, the balance sheet date is at a certain time and it just happens to be that at that particular time.
So in terms of the question about loans have gone up but cash has gone down, I think the distinction I would make is that we've used cash to reduce the need to borrow. It's not to reduce the overall amount of borrowing, if that makes sense.
Oh, sorry.
So had we not reduced the cash balance, we would have probably taken out more borrowing. And then the second question on the net current liabilities going up. So I think if I'm interpreting the question right, the driver of that is short-term borrowing increasing. Now, that will be related to the mix of long-term and short-term loans, and certainly while the interest rates have been so high, we've taken out generally shorter-term loans and not locking in high interest rates for a long period of time.
Or would certainly, obviously, long-term borrowing, would that normally be for capital projects? We wouldn't normally borrow for revenue items. It's merely borrowing to fund capital projects.
Absolutely, yes.
Yeah.
Chris.
Thank you, Graham, and my apologies for being late at the meeting. While Stephen was talking, I was trying rapidly to write things down, and I may have written it down incorrectly. But if I wrote it down correctly, I think Stephen said that for the 22-3 accounts, a deadline has been set today, and that deadline is the 13th of December 24. May I first of all just ask, did I write that correctly, or should that have been the 31st and I got my 3 and 1 mixed up?
It says the 13th of December.
Thank you very much. I wasn't sure I got that right. In paragraph 3.5 of the report, mention is made of the March 23 accounts. And I think we've known for quite some time now that we were going towards a disclaimer of opinion, and we wait to see what the wording is of that disclaimer, but it's going to be very common across the local authority sector at the very least. My interest in this is in relation to objections received in particular, but also any other matters that EY may have. My understanding is that as and when they sign even a disclaimed opinion, that is the end of the audit. So anything has to be sorted out by that time. Nothing can be carried over beyond the 13th of December or whatever date they sign their audit report. And so there is a definitive limit to the amount of time anything, including an objection from a third party, can be considered. Am I correct in understanding that?
Stephen or Michael, do you want to? Michael.
Yes, and I think that Mark answered this at the last committee as well and confirmed that, as well as progress in dealing with 22-23 objections.
Any other comments? Can I just raise one about maintained schools? On page 44, it says at the end of the year, 31 maintained schools were in deficit, almost double the previous year. What implications does that have on us? And is there? I'm aware that we're contacting all these individual schools, but if they decide to convert to academies and all the rest of it, where does that leave us?
So ultimately, maintained schools are part of the council. So any deficits that the schools have is the council's deficit. The current maintained school group as a whole had reserves, a net reserve position, but it's not yet, if at all, in deficit. If my recollection is, if a school is forced to convert by Secretary of State to be an academy, the deficit is written off to the council. If they convert voluntarily to academy status, the deficit then follows them. But obviously, we want to work with schools, particularly maintained schools, as early as possible to deal with the deficits while it is still a manageable situation, and not let them escalate. Because, like I say, it's ultimately the council's deficit, and provides a cash problem as well in terms of deficit balances.
Did you want to add something to this? Would you like to come forward and just tell the committee who you are?
Thank you. Fran Cox, Acting Service Director for Education. Everything Stephen said there is completely accurate, and we are very mindful as a directorate that licence deficits has increased significantly this year for our maintained schools, and for a number of complex reasons. There isn't any one reason why we're in this position. So a lot of work has been undertaken in partnership with finance to think around developing a policy and strategy around how we can support our maintained schools to become viable. And ensuring that there are good and sensible decisions that are taken both within the school, but in terms of our ability as a local authority to support our maintained schools as well, to attempt to support them through the next academic year. So it is a high priority for us in terms of our strategic direction moving into the next academic year, and we are just for committee to be reassured that it is a hot topic, and it's one that our maintained schools are very actively talking to us about, and we're working closely with finance colleagues to put in place measures that can support them.
Excellent, thank you very much. I think that was very helpful. Is it Alan? Go on.
If I can just touch on that, and Fran will be aware. I certainly at Children and Young People's, we had an initial report on that, and I requested, and I think it's been accepted, that we have more detail coming back to that committee later this year. Obviously, each of the schools' situations are different, but it's worth it, because as part of my declaration of interest, I'm governor of 2 schools, but one of them is a very small school. We're not in deficit. We've got money. We've got reserves, but I'm aware on a day-by-day basis of the difficulty some schools have got when they've got very small roles. But I think I'm right in saying it's coming, hopefully, for a more deep dive at Children and Young People's Committee to try and understand some of the issues.
No, that's absolutely right, and it's for CYP to understand the individual school position. I just wanted to see what the implications were for the accounts which we're being asked to sign off. So thank you for your contribution on that. Any other comments, questions? No. Otherwise, we're content. So we're being asked to note the council's draft statement of accounts 2023-24. Sarah, I didn't actually ask you, but is there anything else that you think we should be either asking, Stephen and Michelle about, or that you would wish to add at this stage? I appreciate you've not done all your audit work, but
no, I don't think so. I mean, I think the covering letter that was provided is really helpful and obviously feeds into our own analytics and risk assessment. So that's very useful. We've got continued touch point catch-ups in with Michael and the rest of the team. So I'm sure anything that we need to pick up, we will, and we can bring back to this committee. But no, in terms of what's been presented today, I think until we get into the detail of the audit, I wouldn't expect any sort of further questions at this point.
okay, thank you. Go on, Nick.
Just to follow that up, I think in the past it has been said that the narrative reports has been getting out of control somewhat. I mean, do you think the narrative report that we are receiving is appropriate and sufficiently detailed to allow us to make conclusions, but not so detailed as to make it difficult to understand for the non-specialist?
We can certainly provide feedback on that. I think in terms of our duty as external auditors, it's essentially to ensure that it includes everything it needs to from a mandatory and statutory perspective. We also ensure consistency with other work that we perform, particularly with the back end of the financial statements that we're auditing, but also it links very closely to the work that we do over value for money. So if there's anything inconsistent that we identify, we would feed that back. But also we've just taken on the audit of, I think, 70 local authorities across the country, not me personally, thankfully. But that gives us quite a unique position in terms of seeing others. And if there's, if we do think that there's best practice that we could share, or indeed, whether there's too much or too little, clearly that's ultimately a decision for management and yourselves, but we're very happy to provide some feedback if that's helpful.
That would be extremely helpful, because we're always keen to see what others are doing and steal good ideas. Jeff, I think, and then Chris.
I'm very hesitant to ask this question. I know I'm going to be shouted down, but partly because I'm always concerned that a statement of accounts is a statement of history. And by the time people get round to reading these things, a lot has taken place. So I'm not going to quite go to my question on post-balance sheet events, but we can't ignore the fact that there's been a general election. And yesterday there was a financial statement by the Chancellor of the Exchequer, possibly cutting back on a number of projects, including, so I understand, roads and things that we may be involved in. I don't know. I just wanted to ask this question, whether there are, or we think there are any projects at risk, which means that we've got them on the balance sheet at cost, and which may be abortive. I know that that's next year's problem, possibly next year's problem, but as I say, we ought to be thinking more than just the history of the transactions. I know what a set of accounts is meant to do, but I think it's a question that we probably, as an audit and accounts committee, should be considering and thinking about.
Good thought, Jeff. Stephen.
Thank you, Chair, and thank you to Councillor Seif for the question. Two brief observations. One, too early to tell. The Chancellor's statement was only read yesterday, and the command paper was also only published yesterday. As you would expect, Local Government Association, County Councils Network and this authority and many others are scrutinising that at present. We would expect, if there are any changes to the in-year balance sheet position or grants that we are currently expecting to receive, that those will be formally communicated to us, as a consequence of which we would pick them up through the Integrated Financial Monitoring Report to the Strategy, Resources and Performance Committee in the first instance, and would, of course, as a result of that, make sure audit and accounts were appropriately briefed as well. But I think my honest appraisal around a whole sea of government announcements since the general election is, as I know Michael and others have heard me say, the devil is in the detail. We do not as yet have the detail. Thank you.
Okay, Chris.
Thank you, Graham. I just wanted to go back to the narrative statement. I wasn't going to mention it because when I first looked at the accounts, The first thing I did was to count. I should have really have used the index, but I counted the number of pages in the narrative statement, hoping that it had been kept to 12, fearing that we'd find it was 20 or 30 or more. If I counted correctly, it was actually 13. So congratulations to the Section 151 officer for keeping it far briefer than certain other local authorities have done. I wouldn't want the fact that some other local authorities have 20, 30, 40 pages of narrative statement to be a reason why we should go down the same route. The narrative statement, of course, was brought in. It was the last significant change that there was to local government accounts, and it was called a simplification. And this simplification meant we had to write more. That had then to be cross-checked by the auditors against the rest of the financial statements. And with all due respect, unless it's kept fairly brief and very punchy, it's not going to really fulfill the function it's got, or it's meant to have, of trying to get in a very concise way to summarize the financial statements as a whole. So I'd like to congratulate the Section 151 officer for almost managing to keep it to a dozen pages. And I would very much regret if we were to move in the wrong direction on that in future.
So well done, Stephen, Michelle, and Michael. Okay, so I don't think there's any more comments. Members were asked to note the Council's draft Statement of Accounts 2023-24, which we have duly done. Item 5 is the KPMG audit plan for Cambridgeshire Pension Fund 2023-24. Can I ask Michael Hudson to introduce the report, and then Asim from KPMG is going to be on Zoom to take us through it. Is that right? Oh, sorry, Chris.
Sorry, may I just declare that I am a member of the Pension Fund Board, but not representing the County Council on it. So it's important that that is actually just put on the record.
Okay, no problem. Thank you for that, Michael.
Thank you, Chair. I'll let Asim talk through the details of the report. What you have in front of you today is the plan that was presented to the Pension Fund Committee, of which Councillor Bowden was present, and there were a number of questions raised on the plan. And the one point I wanted to note to the committee was the concern that was raised by the Pension Fund Committee over the fee related to ISA 315, which is at page 225 of your pack, and is based around the risk assessment on the internal control requirement for the auditors. And there was a request for me to flag this with public sector audit appointments in terms of this position and where this was going. The plan itself sets out the key audit risks, the timetable, the staff that will be involved from the auditors, level of materiality, and including in that is the risk of 22-23 not being signed. But I'll hand over to Asim in terms of any further detail on that, Chair.
Thanks, Michael. Asim, are you joining us on Zoom? And is there anything else you'd like to add?
Just to note, I'm not sure whether Asim will be joining us via Zoom. I think because I was coming in person, we agreed that I would present. I didn't want to interrupt as you were talking. Asim did attend the Pensions Committee, and I understand from speaking to him afterwards that there was challenge to the plan. So we're really bringing this report here for good governance and information for this audit committee, given you're ultimately responsible for the overall financial statements, including the pension fund. So in terms of the report itself, rather than going through in detail, unless you would, of course, want me to, some of the key highlights to note from our report are, in terms of materiality, there's no change in the basis of our materiality to that EY would have based it on in the past, which is essentially as a limited to 1% of total assets. The areas of audit focus also are similar, with a particular focus on the level 3 investments and the investment in the Cambridgeshire Bank, which I know my team are understand and are working on. We'll use actuarial specialists as well as the pensions team. So Asim, who you met, a few of you at the pensions committee, is part of our pensions centre of excellence, and it will be Asim and his team that are undertaking the majority of the work. I am responsible ultimately for the audit of the pension fund, and I have a concurring reviewer who also sits in the Pension Centre of Excellence to make sure that we have both myself and also a partner within that pensions team responsible for overseeing the audit. Otherwise, we've not identified any particular differences to the approach that I'm sure you'll be familiar with from past audits. We're not necessarily expecting a disclaimed opinion in the same way as we are for the financial statements audit, because we know that work has been undertaken with regard to the pension fund over the 22-23 statements. And I think just to note Michael's point on the fee, I am aware that there was some challenge to the audit fee, and in particular the additional fee that's expected for ISA 315, the standard that was imposed since the fee was agreed. Just to note that I know you're flagging it yourself, but we did have a meeting last week with the PSAA around fee variations to ensure that we're being consistent in the way that we're applying this, and that we can absolutely justify the additional work that has been undertaken by both the pensions team and the IT team. So we can also bring that back to the pensions committee and this committee. But otherwise, I wasn't proposing to go through any further detail other than to say the audit is in progress where we'd expect it to be, but happy to take any questions.
Okay, thank you, Sarah. And as you would have expected, I did ask Alison Whelan, who chairs the committee, whether she was happy with what's proposed, and she reassured me that the pension committee had been through it with a fine-tooth comb and were comfortable, and she personally was happy with it as well. So on that basis, I'm happy. Chris, and then Nick.
Thank you, Graham. You've taken my first point. The Pension Fund Committee is ably chaired by Councillor Whelan, and we have gone through this in some detail. And so things which are really in the purview of primarily of the Pension Fund Committee rather than Net Board, rather than this committee, just don't need to be repeated here, such as the bank valuation and the building society valuation and other things like that. I see our function, this committee's function, as being a really high level, looking at things as a whole. And sometimes, well, always really, but it's sometimes quite striking how you learn, even having done the same thing year after year after year, you learn something totally new. And in the last few months, I've certainly learned something totally new when it comes to pension fund accounts. And that is to do with the actuary. Now, I've always thought, oh, well, leave the actuaries to that. They're a breed unto themselves. They know what they're doing. Pointless us as amateurs trying to challenge anything an actuary does. Leave them to it, and we accept whatever they come up with. And I lived in blissful ignorance as a result of doing that for a long time, until this year, when I started questioning the percentage that our and other pension funds were actually funded. And we've got really good numbers appearing now. And I started questioning some of them, only to get an answer which I found really surprising. And that was, it depends which actuary you go to. And the actuaries don't even agree between themselves, the four major actuaries who deal with local government accounting, the actuaries don't even agree with themselves as to what is the appropriate method to be used to calculate the value of the liabilities that a pension fund has got. Now, don't ask me the right way of calculating the pension fund liability. I fully appreciate it's a really complicated matter. But what really surprised me was it appeared to be fairly standard knowledge that if you go to actuary A, they will do it in a certain way. Actuary B and C and D will do it in another way, and they will come up with very different figures, including a different figure in terms of the level of funding, which was a figure which I always regarded as being quite important. And I was told as a result of that, don't pay any attention to that. It's not really as important as it seems. Now, my thought on this, Chair, is that not necessarily for this year necessarily, but either we, as an audit committee, or the pension fund board need to understand this better. And we also need to understand the level to which actuary figures can be that much different from one actuary to another. The one figure which is by far the most important in a pension fund set of accounts is the liability. And if that figure is, and I did notice you're smiling, I'm afraid, so I think I might be onto something here. But if that figure is so susceptible to significant change, I think we ought to understand a bit more about why and how, and are we overstating our liabilities, or are we understating them? And has that affected the percentage funding that we're seeing? And so I'm trying to keep this at a really high level. And I'm not sure that it's for this committee to do, or it's for the pension fund board to do. But if it's for the pension fund board to do, I think we as a committee should say, find out what's going on.
Well, I would say it's for the pension fund committee to sort out, but I'd be interested in views either of Sarah or Michael on this.
Yes, so I mean, I can come back with a fuller answer if speaking to my pensions colleagues, but I think you're absolutely right. There will be differences between actuarial firms, largely around the assumptions that underpin the liabilities. And I think to some extent it's inevitable because they are essentially estimates. They are very subjective. So there'll be estimates around things like mortality rates, inflation, etc. And there will be slight differences, and they will only be, the differences themselves will be small. However, the impact on the liability can be quite significant. We also have our own actuarial teams who will have a possibly slight difference of opinion from those firms. But what we will do, and I will feed back to my team and make sure that we bring that through to the pensions committee and to this committee, is that essentially there is no exact right answer because ultimately these assumptions are estimates. What we do, however, do is determine on a scale whether we consider the assumptions that are being used by the actuaries you're using, whether they are neutral, cautious, or optimistic. If they're outside of the scale that we consider to be appropriate, we would flag that as a possible audit misstatement, and we would expect you to consider whether the accounts need to be adjusted. However, we do expect that they won't all sit exactly in the middle of neutral. Some of the assumptions may be considered slightly optimistic, others may be cautious, but as long as individually and in aggregate, they sit within a scale that we consider to be acceptable, that wouldn't necessarily lead to a misstatement. We can be very clear in our reporting through to both committees where we think those assumptions sit on that scale and how that compares to the assumptions that are being used by other actuarial firms. Ordinarily, whilst I acknowledge there are differences, usually what we see is that they are within that acceptable range, and it's quite unusual that individual or certainly in aggregate they would sit outside of that range. The other point that I think is quite important is that this shouldn't impact the contributions that you're making. This is an actuarial accounting judgment that impacts the value of the liability presented within the financial statements, rather than being the liability that's used to calculate the contributions, which I think is important.
I'm very grateful for that answer. It's really helpful. But we've often been told in pension funds that if you're underfunded, you'd better make sure that that's rectified somehow. And the easiest way to rectify it is to increase the contributions. So we use the actuarial estimate, and I fully accept it's an estimate, it has to be an estimate, of the pension fund liability in order to create the number which tells us whether we're underfunded or overfunded, and if underfunded, that we need to take action. But it's sauce for the goose, it's sauce for the gander. If we're saying we shouldn't pay too much attention to a high overfunding, then should we be paying attention to an underfunding? And it reduces the confidence, I think, that we as an audit committee can have, and for that matter, that a pension fund committee can have tremendously, if there is such a variation, and I fully accept that these variations are with relatively small, in fact, very small sometimes, changes in assumptions, but the actual outcome can be a difference between, and I'm going to make say two figures quite deliberately here, but I'm not saying where I've got them from, a difference between 120% funded and 180% funded. And those are massive differences, it seems to me, unless we're being told, don't pay too much attention to the funding percentage, in which case, when we're down at 80% again, I won't pay as much attention to it. But it seems to be an important point, Chair, and I think you're right. Maybe we should ask the pension fund board to give themselves greater assurance as to the meaning of the actuarial figure which is created for the liability, the funding position, and therefore what we should do as far as that's concerned. Because I've certainly been under a misapprehension for years that that percentage is a really key percentage, and now I'm being told it has very little meaning.
Are others content that we ask the Pension Fund Committee to look into this? I think that's the appropriate group to do it. All right, thank you very much. Nick.
Yeah, just to Chris's point, my pension scheme, USS, that underwent its triennial valuation on the 31st of March 2020, when the stock market had crashed because of COVID, and that it led to a subsequent huge fight to balance that estimate out. But I thought the actuarial activities were overseen by the pensions regulator anyway, who the pensions regulator has an enormous amount of power in these situations. But that wasn't my point. My point was to ask about Cambridge and Counties Bank. Will we see the conclusions of your specialist valuers? Because it still seems to be very opaque to me. And the second thing, there was some sense in which divestment of Cambridge and County Bank might occur. Is that a possibility without the agreement of the partner, Trinity Hall, Cambridge?
I'm not aware of a divestment, whether that's being considered, but certainly not impacting the set of financial statements that we're auditing. Could be a post-balance sheet event if a decision is made, but I'm not aware of that certainly not as a definitive answer. In terms of the investment in the Cambridgeshire Bank, I can request that we include as much detail as we're able in our report, if that's helpful in being transparent over exactly what we've agreed the position to. There's no reason why we can't share that.
Michael.
Thank you, Chair, through you. The position in relation to the bank, the evaluation has been carried out in the same format and on the same basis as previous years by a third party. That's the evidence we'll provide to KPMG, and clearly they'll make an assessment of the robustness and quality of that. I think all matters, I think Councillor Bowden alluded to earlier, I think they're for the pension committee.
Does that answer your question in that there is no plans at the moment to do anything different? Okay, thank you very much. Any other comments? No? So we have noted the audit plan for the pension fund 2023-24 and the presentation by KPMG. Thank you. Moving on to the next item, which is the update on consultancy and agency spend. Claire Ellis, apologies for confusing you with somebody else earlier, Head of Procurement and Commercial. Would you like to introduce the report?
Thank you, Chair. And my colleague Caroline from HR is going to support me in the report presentation. So this is the report that we bring every 6 months, covering spend on consultancy arrangements, agency workers and interims across the council. You will note that there's some additional information in this report on interims as required by a recent internal audit. And there's also some context on the spend as provided by the individual service areas. The report covers the measures that have been put in place corporately to manage consultancy and agency spend, as well as the work that's being done by individual service areas to reduce and manage that spend as well. Happy to take any questions. Thank you.
Okay, any comments, questions? Well, I feel I'm going to have, oh, go on, Chris.
Thank you, Graham. I'm just going to ask a question about our old friend KPI 169, which is the percentage of procurement waivers submitted within 5 days of their start date. Now, this has been the subject, this or similar KPIs have been subject of discussion for a few years now. And I know that the chief exec, especially with his background, has it's been one which he has focused on as well. And one of the ways in which we have made this, we haven't made the KPI better. One of the ways in which this has been dealt with has been to stop having procurement terms of 0 days, which is an entirely sensible means of moving forwards. And because of the amount of effort which has been put in on top of that, we are seeing a significant downwards movement. Sorry, do you want to interrupt me?
Councillor Bolton, if you'll forgive me, I think you might have jumped ahead to the next report. This is the agency and consultancy spend report.
I do apologise. I was so keen. I'll try for that one. Sorry, apologies, Chair.
Yeah, well, hang on a moment, because that's also going to be Claire. So let me just deal with this question first. In which case, whilst others are maybe thinking of what they might or might not do, I want to just ask you about the rates for interims on page 240. If I can find it. So it says of the interims identified above, the top 3 highest day rates were 1 in adults, health and commissioning, and 2 in children, education and families. How do we know what the day rates are and whether those are reasonable? Because we can understand the numbers, and the report on the numbers is extremely helpful, but we might have a view, or we might not, on the day rates as well.
Hello, I can speak to that point. So we know the day rates at the point that the individual is engaged with us and through the arrangement that we have with the supplying agency. In terms of the reasonableness of that rate, if it's above a particular percentage above the normal grade for the role in the organisation, that is business cases put together, and that is signed off by the director of HR.
And what was that percentage increase
If it's
that requires a business case?
Yes, if it's more than 20%.
If it's more than 20%, it requires a business case approved by the director of HR to justify that rate.
Yes.
Okay, thank you. All right. Any other comments, questions? No? Oh, go on, Alan.
Just one question, and I'm not expecting an answer to it, to be honest, because I think it's too detailed. But obviously we budget, and Michael's left the room, but as I understand it, we budget for vacancies. So we have a vacancy factor in the accounts, but so I won't go there on the rights or wrongs of that. But it would be useful, certainly from my point of view, to look at what cost, if we look at interims more than consultants, agency staff and interims, what cost that is compared to the actual budget for full-time employed contract, full-time employed staff, to see what the actual financial effect is of the increase of interim staff as opposed to employed staff. As I say, I don't expect you to have that answer. I'd be very surprised if you did. But I think it's something that I think we could. It's a hidden cost almost, because we don't know what that cost is.
Because there will always be some level of turnover, and therefore building in a vacancy rate makes sense. And just speaking off the top of my head, you wouldn't automatically put in an interim or a temporary member of staff to cover a vacancy unless it was longer term, and there was a problem in the recruiting from the market or whatever. Is that correct?
Yes, absolutely, that is correct. Yeah.
So does that sort of reassure you, Alan, that
I think
these
it's one
are
I'll possibly
exceptional
pick up
circumstances.
outside. I think it's a very detailed question, which I wouldn't expect anybody here to have the answer to the hand, but maybe I'll pick it up outside.
I thought Alan's question was very interesting, but it appears to me, and Alan talked about it being a hidden cost. There are two elements to this which would need to be separated out in order for any useful information to be available to anyone, whether that be management or this audit committee. The first part is, to what extent was there under complement, were there posts which just weren't filled, work which wasn't done, and thereby there was less expenditure on salaries? And to what extent were there people brought in on an interim or agency basis who filled those positions, and how did that match the amount of money which had been put in as a vacancy factor? So you need to separate those two out, and then I think you might find a very interesting answer indeed in terms of the proportion of cost for agency and interim compared to the amount which had been made available in the vacancy factor, or part of the vacancy factor. But we haven't got that data, but I think that could be really interesting.
Are you happy to take that away and try and come up with an answer? That would be very helpful. And Stephen's nodding as well, so he will support you. Thank you. Okay, no other comments, questions? So with those provisos, we've noted the procurement and commercial annual report. Thank you. I know we haven't. We've done. No, you're getting me confused now. We've done the update on the consultancy and agency spend. Right, now we move on, Claire, to your report on procurement and commercial annual report, and you might wish to answer to prejudge Chris's comments about KPIs.
Thank you, Chair. So this annual report is the second annual report we brought to this committee covering the work of the procurement and commercial team. So I'll just take you through at high level what the report covers. So sections 1 and 2 covers the activity of the procurement teams and the commercial team during the last financial year. Section 2 covers the most recent audit opinions, both internal and external audit opinions on procurement, which are an improvement from the last round of audit opinions that we've received on procurement. So that's a positive message. Section 3 covers the work of the Procurement Governance Board, which is fully operational, has representatives from each directorate, and is chaired by the Service Director of Finance and Procurement. So 3.3 and 3.2 go through a high-level summary of the work that board's undertaken in the last financial year. Section 4 is an update on performance and covers KPI 169, which is the waivers submitted within 5 days of their start date. This is an improving picture, but we're still not hitting target. I would say that we send monthly figures to CLT now as part of the balanced scorecard, and we have a bit more analysis around those figures that CLT are able to see and take action on as necessary. KPI 205 is social value delivery. So you'll see that whilst we were under target in actual social value delivered, there's a lot pending validation there in the background, and we've met target on the annual spend of local suppliers. 4.2 goes through a bit more some of the wider activity that the team have undertaken in regard to our service plan and the sustainable procurement strategy. So I'll leave that for you to read. And then sections 5 and 6 talk about implementation of new legislation. So we've already implemented the provider selection regime for health-related procurements, and we are in the process of implementing the changes required for the Procurement Act, which will come into force on the 28th of October. So again, happy to take any questions. Thank you, Chair.
Chris.
Thank you, Grim. I'm not going to repeat everything I said before. What I was leading towards was saying that this indicator is in many respects a lagging indicator of the actions which have been taken to try and resolve the situation. because we found ourselves in quite a poor situation, it has to be said, in terms of procurement, of which this is merely one, but a very important indicator. And as a result of the work which has been put in to plan better for future procurements, as well as structural changes such as largely getting rid of 0-day terms and conditions, those will assist in terms of getting greater control and getting better, clearer reporting on the issue of failure to plan properly, so we end up with these late these waivers having to be requested. Now, unfortunately, in the real world, sometimes you've got no choice but to ask for these waivers. Things happen in a procurement process. Companies pull out, whatever it may be, circumstances change. So unfortunately, expecting this ever to get to zero would be, you'd be living in a fool's paradise if you ever expected that to happen. But the point is, we are very much on a positive trajectory here. Some of the work which has been done hasn't yet fed into these figures and will do as time goes on. So now, previously, this was a process concern. And I believe that the process, even though the figures haven't yet fully shown it, that process concern is to a great extent sorted out. Now my interest is slightly different, and that is I'm much more concerned about what happens with one £5 million procurement than I am with 10 £5,000 procurements. But whilst we were concerned about process, we were just counting the number of procurements. Would it not make sense if we are trying to monitor how well we're doing in the larger sense with procurement being on time and not asking for waivers, for us to start looking at the value of procurement, which is subject to the 5-day waiver, rather than the number? The number is required once you're concerned about process. Now we're no longer concerned about process. Surely we should be more concerned now about the numbers.
Okay. Sorry. Yeah.
You'll set actually the point you're making there, but I think one critical measure of the effectiveness of procurement is the degree to which there is a variance from the original budgeted figure or the contracted figure and what the outcome actually is. Now, that may be due to a number of factors, not just the procurement itself, but I've come across many situations where the spec for the particular items being procured, items or contract, have not been as clear and defined as they should be, and then costs start running away. Now, I don't know. I don't know whether that's a KPI or something that we try and measure, but that would be a measure of effectiveness of procurement process. And you can separate out what is as a result of perhaps not, I'm saying that there's poor procurement, but that would be reflected. And of course, if there are absolute changes because of circumstances, that becomes a different matter entirely.
Claire, do you want to comment on those thoughts?
Yes, thank you. I can come back to you on the value of waivers. My understanding from most recent quarters is that the overall value of the waivers is going down. So we haven't had as many over £100,000 waivers come through more recently, but I can certainly get the actual figures to you if that would be helpful. In terms of the difference between budgeted costs and actual costs, at the end of the procurement, we have quite a rigorous process. So we have a procurement plan which identifies the budget for that procurement. And then we obviously work our way through the procurement process ourselves, and the award report will identify to chief officers any difference between what was originally budgeted and originally envisaged as the cost of the procurement and what's come through as the actual cost from the market. To some extent, that's mitigated by market engagement at the beginning. So we're doing more and more market engagement to understand what the market can deliver at what value, so that we have a better understanding going into the procurement. But then it would be for chief officers to decide whether or not to award based on the actual procured costs.
I wasn't thinking of between budget and contract. I mean, that often happens, as you say. Market factors may be involved, and very often a contractor will identify things that perhaps need to be included in the contract, but also the stage between contract value and the actual outturn cost. And as I say, there are instances where as the contractor's working on something, they identify things that weren't actually specified in the first place. How easy that is to identify and then use it as a comment on the procurement process, I don't know. But in commercial organisations, that's looked at pretty closely.
Stephen, do you want to say anything on this before you need to depart?
Very briefly, Chair, with apologies to members, I have another appointment, which means I have to leave early today. I think to Councillor Bowden's original point, the distinction between volume and value is actually rather important in this space. So Claire's right, we do scrutinise both increasingly. And I think, again, from memory, the value of waivers has been reducing in recent months. That said, obviously, you would expect us to pay attention to the higher value waivers. Nonetheless, I would like to see both continue to reduce. So I think the scrutiny that's now brought through, having the KPIs, having the process improvements, and actually I would make the point that Claire and her team have been helping drive one of Councillor Bowden's favourites and mine, the cultural change necessary as well, because it's not just merely have the right process, it's have ownership of the process by the right people. Claire, working alongside our monitoring officer and others, have been meeting with all of the directorate management teams to reinforce the importance of this. In fact, she's doing a session tomorrow for the extended leadership team in this very room with all of our service directors, executive directors and myself as part of a broader agenda, just bringing them up to date on all matters commercial and procurement. So there is a continued process of trying to ensure appropriate ownership, not just of waivers, but actually procurement as a whole thing. And to Councillor Seif's comments, I guess the only reflection from me would be where a contracted supplier is proposing things that are outside specification, they'd have to go through a proper process to get variation agreed. That wouldn't be just through procurement and commercial. It would have to be discussed with the service and properly signed off as well. So the service would, if wanting to take on an additional service that wasn't in the original scope, and effectively agreeing to a variation, would have to demonstrate they could fund it and it was done through appropriate process. So actually Claire's team might not have all of that information to hand, but the controls to prevent it happening on an ongoing basis are in place. Thank you.
Thanks, Stephen. Ian.
Thank you very much, Chair. It was a quick question really. Under 4.2, we state that we've got an environmentally conscious guide to procurement. I just wondered how that was working.
So that was published fairly recently and sits on alongside the wider procurement guide. So when we're supporting procurements, we always refer responsible officers to the relevant guidance. We always ask suppliers now to sign a climate change charter when we're procuring over 100,000. So that's a key way in, if you like, to supplier markets to ensure that we've got responsible suppliers coming through and winning contracts. We aren't monitoring actively the engagement with that yet, but I'm working with the Climate Change Board, I think they've got that name right, to see what analysis we can do of the use of that guidance.
Nick.
Claire, could you just in very briefly explain what the major changes that will be implemented by the Procurement Act 2023 will be? Maybe they're in the paper somewhere and I've missed it, but it would be useful to know that.
I can, and I can also share a paper that was taken to Assets and Procurement, if that would be useful, which summarises the changes. In very high level terms, the processes that we're allowed to use are changing. So at the moment, we have a range of defined processes: open, restricted, competitive, dialogue, etc. Those are reduced to just 2 processes: open and something that's being called competitive flexible, which is basically you can do what you like as long as it complies with the principles and the objectives. There is a lot more transparency throughout the Procurement Act. So we normally publish around 5 or 6 notices through a procurement. Those notices now start in pre-procurement and finish through into contract management. So there's now, I think, 14 notices that we will be required to publish at one stage or another through the procurement cycle. There is a lot more emphasis on things like conflicts assessments, risk assessments being done right at the start of the procurement process and then flowing through and into contract management phase. So those are probably the key changes, but I can certainly share that paper if that would be useful for this committee to understand in the future.
I think that would be very helpful, please, Claire. Nick. Chris.
Thank you, Graham. This may be one for our Section 151 officer as well. We do have a strategy, resources and performance committee which deals with these matters generally, but one of our jobs as an audit committee is to have oversight of everything that is going on. And I've had concern, and I've expressed it a few times over the years, about a wider issue to do with procurement, and that is the division of measurement in a procurement exercise between cost and quality. Now, we're all familiar with the suggestion we'll make this decision based 40% on cost, 60% on quality, whatever. And sometimes we think we're doing quite a good job, chair as councillors, when we say, no, we don't think that's right. It should be 35, 65 or whatever. But I don't think that it's very well understood that in trying to combine cost and quality in one figure, you actually are comparing apples and pears. The cost is often, there are lots of ways of calculating this, but cost is often based on a percentage of the lowest price, and whatever the increase is relates to the scoring. Quality is normally based on a 1 to 5 criteria on a number of questions. And if you look at that and actually take it apart, it means that the gradation which there is on the quality side is very often far greater than the gradation that there is on the cost side, unless you have some massively unusual tender figures, which leads to a bias normally towards quality as opposed to cost. 4 years ago, when I was the vice chairman of the health committee then, I took one particular contract apart and went through the calculations in real detail. And it was meant to be 60% for quality, 40% for cost. And when I took it apart and put it back together again, looking at the scoring systems involved, it ended up actually being 98% on quality and 2% on cost. Now, in that case, fortunately, it didn't make a difference because the bidder with the best quality also had the lowest cost. So it didn't make any difference to the outcome. But it did show to me that I think that there is sometimes there is a failure, particularly on those who aren't specialists in procurement, to understand that the scoring system which is used can massively bias the result which you end up with. And I just wonder if more thought needs to be given to this, maybe more training, maybe more information to members.
Thank you. We have, I don't know whether it was mentioned in this report, we have recently published an evaluation protocol, which sets out to responsible officers across the council how they might go about putting together their evaluation criteria and their methodology. One of the different methods proposed within that is that we use a price per quality point methodology, which goes some way to mitigating the risk that you've just identified. It is very new in the public sector. Traditionally, we've used that pro rata on price, standalone on quality perspective. So we are trialing it at the moment to make sure that, firstly, we understand how it operates, but secondly, suppliers are sufficiently clear how their bids are going to be evaluated. But that is quite a major part of that evaluation protocol going forward.
Chris, did you say about members understanding more? Because I think what Claire's just described is something which you're going to brief officers on, and that doesn't include us. Maybe we should understand a bit more about it as well.
I'm certainly very happy to, we do annual procurement training. I'm very happy to include evaluation modelling in that procurement training going forward.
I'm really pleased to hear the comment which has been made. There is a problem with it, and it is the right direction of travel. I'm not saying otherwise. And this came out when I was the chair of LGSS when it existed. LGSS provided procurement services for this and several other councils as well. So it had a team of procurement specialists, and they were very professional indeed. The problem lay in the individual councils and the officers who were seeking the assistance of the procurement department, because they weren't procurement specialists, and they just did not understand. And this isn't a criticism of the officers. It was outside their remit. It was outside their area of expertise, and they didn't understand sufficient to be able to understand the choices that they were making or proposing so far as the procurement is concerned. Now, it's this disconnect between the professional knowledge of the procurement specialists and the more generalist position that the officers have gotten their specialist knowledge in their areas. It was that division which I found particularly worrying. And yes, training is good, but with all due respect, you're not going to be bringing an officer fully up to a professional procurement level, because it is really, really complicated, a really complicated area. So that's why I thought our Section 151 officer would be particularly interested in this, because it is an important issue. It's a very difficult one to solve, and it certainly exists as an issue. We are moving in the right direction, but it is something we need to keep our eye on.
Michael.
Yeah, just to come back on that, one of the additional things that we've also got is the procurement plan, the route to market, and that is now a requirement and is signed off by the appropriate officers, either the executive director, in which myself, or the service director. So that also is the first point at which there's external or internal challenge from the decision to go out to market. So that is another layer that's within that process.
For that, Graham, but I will emphasize what I'm talking about here is really limited to the scoring system and the two different scoring systems which have very often been used in the past between cost and quality. If those scoring systems are sufficiently divergent, then you end up with a decision which isn't necessarily the one you think you're making.
Okay. I'm going to put Mairead on the spot here. As far as we can see, things seem to be improving significantly in procurement. Is that your understanding? And on page 248, where it talks about final internal audit reports on waivers, which we've talked about, stroke direct awards and consultancy are currently outstanding. Is there anything in those reports that is likely to be hitting us? And are you happy that Claire and her team are doing a sterling job now?
Thank you, Chair. I think, yes, from an internal audit perspective, we'd say that the control environment within procurement has significantly improved. There have been a lot of improvements to different aspects of the control environment, but particularly we're seeing more controls in place which are automated and can't be bypassed within things like our ERP system. And more sort of detective controls as well. And I think the outcomes of more recent audits have particularly shown that there's been an improvement in compliance for contracts which are at their highest value, which obviously are the contracts that we're most concerned about. So I would say definitely we're seeing a positive direction of travel. The two audit reports in question are both at the draft report stage. So I wouldn't see off the top of my head that there's anything in particular which I should highlight to you now, but when they move to an agreed final version, then we will of course bring that back to this committee. But yes, I would say overall we are definitely seeing an improvement in procurement, and that was highlighted in my annual opinion as well.
Excellent, thank you very much. That's just what we wanted to hear, Claire, particularly after the adverse criticism from external auditors years gone by. So we have noted the procurement and commercial annual report. Thank you, Claire. I think that finishes your two items. And we move on to the next item, which is the internal audit progress report. And can I ask Mairead Clayton, as head of internal audit and risk management, to introduce the report, please?
Thank you, Chair. So this is our regular update report regarding progress with delivery of the internal audit plan to the 30th of June 2024. I'll pick out a few key things to highlight to the committee. So at section 3, you see reports that have been finalised or issued as drafts since our previous progress report, with section 4 giving summaries of those reports where an audit opinion of limited assurance has been given. Section 6 shows our flexible audit plan looking forward for the next 4 quarters of audit work, and Annex A shows you progress with the 24-25 plan to date. Section 7 gives information on the implementation of agreed audit actions to the 30th of June. A few key things to highlight in this section. So we have 75 audit actions outstanding at the 30th of June. That's a reduction on the 80 actions that were outstanding at the previous report in May. The report in front of you outlines at section 7.2 that there are 3 essential audit actions which have become overdue since our last report. Since this was published, we have now had confirmation from the Children Education and Families Directorate that one of those 3 actions from the Dedicated Schools Grant Safety Valve review regarding the implementation of a new system has now been completed. So we are down to 2 essential outstanding actions. We've highlighted at section 7.2.5 that several actions which were overdue by over 12 months, as at our previous report to the committee, have now been implemented. And we've also noted at section 7.2, 2 cases where an action has been closed to further follow up by internal audit. In one case, that's because the risk is now considered to be low, and therefore we're changing that to an advisory action. We will not continue to follow up. In the other case, this is because the action is essentially duplicated within other actions that we're following up. So to reduce duplication, we're just taking that one out of the list. Annex B, as usual, provides you with updates on actions outstanding for implementation. We have had a few further updates where action due dates were set as the 31st of July, which I thought this committee may be interested in. Just to update you that in particular, the Data Protection Officer has confirmed that the Information Management Board will be meeting late August or early September. That's a key dependency for closure of several actions linked to the Transparency Code and Freedom of Information audits. Section 9 is our regular update on whistleblowing and investigations. A key development being that we have some new whistleblowing and counter-fraud e-learning for all staff, which has now reached testing stage. So we're hoping that that will be launched in the autumn, and hopefully by the time that we come back to this committee, that will be live. And that supports the whistleblowing benchmark work that we did with Protect, the whistleblowing charity, earlier this year. And then section 10 finally gives an update on key financial systems audits. So very pleased to report all audits are now at draft stage. That includes the debt recovery review, which the Cambridgeshire team took on from West Northamptonshire colleagues, which has been issued with a moderate opinion on systems and good opinion on compliance, which is the same as the previous year. So with all that said, happy to take any questions.
Thank you, Graham, and thank you very much, Mairead, for your usual excellent quality of reporting to us. It does make our lives so much easier when information is presented in such a straightforward way and in an ordered way. And part of that ordering, of course, is your listing essential recommendations, which are overdue first and going down then in order of priority. And for quite a few of our meetings, the top of the list has been adults and health. And I'm pleased as a member of the Adults and Health Committee to say that's no longer the case. What did surprise me is what I read there and also in the report itself about the safety valve review. And this is a case where it would have been really helpful, I think, to all involved to see more detail here. But I understand why internal audit reports are not normally made public. I understand why that's the case. But this is a case where it would be really both interesting and important, given the amount of money which is involved. Now, we, Chair, of course, are not a service committee. It's not our job to do any of this work. It's really the job of the service committees themselves to do the relevant bits of work, and just for us to make sure that they are doing the right thing, looking at the right information and making decisions based on that. But I looked back. I'm not a member of CYP. I don't know if anyone here is, but yes, good. So I just looked back at the minutes because my recollection from what I'd been told was that our big problem with the safety valve review, with safety valve situation, had been to do with government not providing schools at the right time and so on, which is fine. I thought that was a perfectly reasonable explanation. But nowhere, and I tried looking back in the minutes and I didn't see within CYP minutes any mention of this, nowhere within CYP did I see any mention about data accuracy. Nowhere in the committee minutes, which I looked at, did I see anything about the smart targets and the expected benefits and the measurable aims? And it does worry me that what has been, well, to me, been exposed, and as I say, members of CYP might tell me otherwise, but whilst I thought that our problems with the safety valve were external ones, it looks from this as though they're also internal ones, and quite significant internal problems at that. So I'd really be interested to know if CYP have been fully informed about these problems of data accuracy, of failure to have smart targets, of really not doing the number side that we need to do, not being able to do the number side that we've needed to do. And if they haven't been made aware of this, my suggestion, Chair, is it's important on the basis of what we see here that they are made aware of that. As I say, it's not for us to do the work of CYP. Thank you, Chair.
Thank you for joining us again. Let me just ask, Alan, do you want to come in at this point, or should I? Fran, just to clarify, because we've also all received 2 emails over the last couple of days, and some of the issues which are raised in there are not necessarily matters for audit and accounts, but they're definitely matters for Children and Young People Committee. So perhaps you could just clarify the elements which we should be concerned about and which we should be ensuring that CYP are aware of, like, for example, the results of this internal audit report.
Thank you, Chair. So yes, and thank you for the question, and I understand the role of this committee versus the role of the Children and Young People's Committee. The timing of the original safety valve agreement was an interesting timing in terms of the timing of the CYP committee, and also where the decision making lay in terms of whether to enter into the CYP committee. And there was a confidential report and some training offered to CYP upon entering into the safety valve agreement. So all members were part of that, and we had a full and thorough discussion with them around what it meant to enter into the programme. In terms of regular updates to CYP spokes, we meet very regularly, and there is regular updates to members of spokes in terms of the progress. And as members will be aware, the situation we find ourselves in at the moment, where we are renegotiating the safety valve deal with the Department for Education, in light of the significant rise in demand that not only Cambridgeshire but nationally we've experienced, which has meant that some of the conditions that the safety valve agreement was linked to have not been possible. So to give some reassurances, there is regular communication with spokes around this, and I believe in the forward plan there is within the autumn term a report that's coming to CYP to report on the annual progress and the positioning that we're in. The timing of that will be aligned with the resubmission to the department in October time around what the renegotiated position will be for the council. So hopefully that gives some reassurance that CYP is fully cited. And I don't know if Councillor Sharp, you wanted to add to that. I guess finally, just to say in reference to the data accuracy element that you note there. The services have been implementing a new system over the course of the last year, which has meant that data migration from an old system into a new system, and you will have seen from the report that very much one of the recommendations that the service have been working through with IT colleagues over the last year to make sure that we now do have a system where we can accurately forecast data from. And that's been a long and difficult piece of work. But I'm really pleased to say that we're now in a position where we can, and that will be so important in terms of our renegotiation with the DfE. I think, I guess, finally, I would just want to say this isn't an issue that is peculiar to Cambridgeshire. The significant increase in demand and complexity of children and young people with SEN is one that is seen nationally, and in terms of data quality and in terms of systems being able to keep up with the now almost 8,000 education, health and care plans that we have, is something that is not just seen in Cambridgeshire. But I'm pleased to say that we're now in a position where we're far more resilient, and Mary made reference there to the recommendation which we've closed out this week around that system now being in place, and us being able to report more accurately from that. I hope that helps.
Thanks, Fran. Could you just clarify the comment which Mairead makes about staffing capacity is also a concern for the programme, as to whether that has now been addressed?
Thank you. As you would expect, and again, this speaks to the increased demand in terms of the resource that we have, and health colleagues have, and social care colleagues have, because not forgetting that this is not just an education issue. SEND is a tripartite partnership issue. The system's capacity to deal with the increased demand is significantly lagging, and again, that's one that's well referenced in the County Council Network report that was issued this week, in terms of the resource that our children, young people deserve and require needing to be appropriately found. And that's not an easy thing to do within a local authority context, nor a partnership context, but one that we were really pleased to see highlighted in the report. In terms of our resource, we have a new assistant director for inclusion that has been appointed on a fixed term basis in order to provide additional leadership capacity in this space, as well as our new service director for education who joins us next week. And I know, speaking on behalf of our exec director, there is a real focus from his perspective on making sure that the leadership capacity is there in terms of the delivery of the inclusion transformation programme as it will become, and making sure that not only are the audit recommendations properly given strategic oversight and focus, as you would expect, but also that there is a shaping of the services that sit underneath them to make sure that the demand is appropriately met. Again, for a risk of sounding like a broken record, this is not just something that Cambridgeshire is experiencing. This is a national issue, particularly with the shortage of educational psychologists, to name one, but issue that is a national issue.
Okay. I hear what you say about that, Fran, but ultimately it's the residents of Cambridgeshire that we're worried about rather than all the other counties.
Absolutely.
Alan, is there anything that you'd like to add, and then back to Chris?
Not too much to what Fran said. I do vaguely remember the seminar, but I was just trying to find when it was. I try and see if I could then go back to my notes on it.
September 22.
Sorry?
September 22 it was.
Yeah, so it was okay. It was back quite a while ago. So I think in some ways, seeing where we're at now, that's sort of getting on for nearly 2 years ago. So I think we need to be probably as a committee having a look at that. And obviously, I'm not the lead on CYP, so I don't sit on spokes. So I'm not sure what's been shared there. But it is as you say, it's maybe not unique to Cambridgeshire, but obviously that's all we're worried about. But so I think it's something maybe we should pick up again at CYP personally.
Thank you indeed, Graham. I don't want to get into all of the discussions and concerns about SEND, because that's not our function. What is our function is to look at the recommendations, and especially the overdue recommendations which come from Mairead. And I accept that there are other recommendations. There's a medium recommendation which is overdue by more than 12 months concerning educational, health and care plans. So I fully appreciate that this isn't a simple individual item which solves all our problems. But we are told about these two essential recommendations which were overdue, and certainly the second one will continue to be overdue at least until October, we're told, to do with the data which underlies all of this. The data transfer, which is an issue specifically for us rather than for any other council, from an old system to a new system, as we've just been told, has been difficult and has caused difficulty with data accuracy. And then, once we have the data, as we're told, we then need to start setting smart targets, having expected benefits, having the measurable aims everything that you would expect to have. And I'm really surprised that, and I understand that you can't do the impossible. If you haven't got the data, you can't do anything. But I'm really surprised that Children and Young Persons Committee weren't aware of this at the time we entered into the safety valve agreement. And that's why what I'm suggesting, Chair, is that we send these 2 recommendations to Children and Young Persons, if necessary to be incorporated within the autumn meeting CYP paper we've been talking about, so that we can point out to them, make sure that they're aware that the internal auditor has stated that these are essential recommendations, at least the second of which will be overdue because of the amount of time it'll take, and so that they are better informed when they make their decisions come autumn. So that is my proposal, if that's acceptable to you, Chair.
Are you happy with that proposal?
Absolutely. Just to add one other element, that regular risk reporting and regular performance reporting do highlight a series of both performance measures, but also risks in relation to SEND. So I just didn't want to leave that out in terms of the information that's regularly presented to CYP, but absolutely would welcome the ability to feed back to committee specifically on the overdue recommendations in the autumn. Thank you.
Go on. I'm glad this happens to Democratic. Oh, there you're right.
Oh, thank you. We got there in the end. Chair, I was just going to say, if you are minded to refer those 2 recommendations to CYP to consider, I would suggest you do that as a formal amendment, so that you consult the committee on that and it's put formally to CYP rather than through the action log.
Okay. Yep. Whatever you recommend, we're happy to do that. As long as Alan and his colleagues discuss it at CYP, I think that's the main thing. So we'll include that as an amendment.
So it would need to be proposed and seconded and voted on.
So Chris is going to propose it and I'll second it. Then it's cross-party, Ian, so we don't get into trouble by being party political about anything. But no, that sounds good to me. The other thing which I would just point out is the all those in favour of the amendment, please show. There's nobody against. That's unanimous. Right. The only other thing I was going to mention, Rishenda, and I'll need your help today, is for people who want to ask, members of the public who want to ask questions, they have to nominate, they have to say that they wish to do that. How many days before the meeting?
It's midday, 3 working days before the meeting, Chair.
Okay, so if any members of the public wish to make comments, they need to let Democratic Services know 3 days before the meeting commences. You don't need to say what you're going to ask, but you can then ask a question, highlight a particular issue, or as you wish. Right, thank you very much. Any other comments on Mairead's report? There was one issue about whistleblowing cases, which I raised when we had our pre-meet about local government ombudsman complaints and whether or not they should be included in your report, and if not, how members of the council get to know about them and whether that's significant or not. And then the other question I was going to ask related to complaints was, you tell us about the number of closed cases, but not the outcome, I think, of those closed cases. And is there a way of knowing what those outcomes were? Thank you.
Thank you, Chair. So in respect of the first query around local government ombudsman complaints, we would not include those in the whistleblowing investigations total, because we would treat whistleblowing as being something which is distinct from a complaint about a service received. There is currently a project ongoing which is reviewing the council's complaints process, and I understand that part of that will be looking at how the reporting overall of complaints across the council can be amended. So I would be expecting most likely that will report into Strategy, Resources and Performance Committee, but that is something which is being looked at corporately currently. And then secondly, with regards to the closed cases, so the approach that we take within this reporting is that anything which has led to an internal audit investigation, so it hasn't been closed as, not something we can investigate, or actually there are no issues after a very brief look at it, but it's gone to a full investigation, then we do bring a summary of that investigation report to committee within this section. We haven't had any reports go final within the period under review, which is why you don't have any summaries in this report. But I think we currently have reported a couple at draft, so I would expect in the next progress report, you will get the summary of those investigations, and particularly a focus on whether we've made any recommendations to kind of change or improve processes as a result of that.
I don't know about others, but I didn't understand that, Mairead. If something is closed, doesn't that mean that you've investigated it and you've concluded something?
So that's me explaining badly, Chair. Apologies. So when we get whistleblowing come into the team, there's a range of possible outcomes. One is actually it's nothing to do with us. We often get whistleblowing complaints that, for example, relate to Cambridge City Council or to an academy school. In those cases, we would discuss with the whistleblower how they can raise their complaints with the appropriate body, or if it's anonymous, then we would pass that complaint on to whoever is the appropriate authority to deal with it. So in a case like that, we would mark it as closed, but we wouldn't necessarily bring that to this committee. Similarly, if a short initial investigation at a very high level identifies there's no case to be answered. So for instance, we get a complaint in, a whistleblowing complaint in alleging that our employee, Mr. Joe Bloggs, has done XYZ, and we identify that we do not have and never have had an employee named Mr. Joe Bloggs. Again, that won't come to this committee because we wouldn't consider that a full investigation. We'd say that's kind of closed on the basis of there being no case to answer. So it's only where we go to a full investigation that we would bring those outcomes to you. I'm happy to bring you, if you would like, the kind of summaries of those things, but we've generally not brought them to committee because it could just get a bit overwhelming.
If you don't bring it, I will ask the same question next time because I will have forgotten the answer. Any views around the table? Personally, I think it would be helpful just to see what 3 closed cases means, even if it's just 3 lines. Yes.
Yeah, happy to bring that.
Don't mind.
Okay.
Okay. Jeff, was that a different question?
Well, it's sort of partially connected. It's the general case for the outcomes of internal audit reports. Maybe I thought wrongly, that we all have access to an internal audit portal, so we can actually look at the internal audit reports and their conclusions. Certainly I've done on the ones that I've been interested in, but I thought that was generally opened up to all members of this committee.
That's certainly true for reports. Is that the same for whistleblowing studies?
So again, that would only show you where a full report has been written. So if it was a case that was closed without a full report needing to be written, you wouldn't see that on the portal. So happy to bring short summaries of those cases.
Okay, I think that would be helpful. Thank you. All right. Any other comments, questions on Mairead's report? No. So we've considered and commented on the contents of the report. It's 3:45. You happy to just keep on going? We might be done at 4. The next item is the annual risk report. Just be clear when we introduce this, Mairead, about our role versus SRP's role and other people's roles. Thank you.
Thank you, Chair. So this Appendix 1, you will find our annual risk management report, and this summarises the risk management activity undertaken during 2023 to 24 at Cambridgeshire County Council. It is the same report which was presented to Strategy, Resources and Performance Committee on the 9th of July. And this reflects that Strategy, Resources and Performance Committee have responsibility for the development and oversight of risk management and strategy. While the Audit and Accounts Committee have responsibility for considering the effectiveness of the risk management arrangements and the associated control environment, and to seek assurances that appropriate action is being taken in response to risk. So this report summarises key systems and policies we have in place to support effective risk management at the authority. A key part of this is the Council's risk management policy, which is attached at Annex B. This underwent a major review in summer 2023, and aspects of the policy, such as the risk scoring matrices and the risk appetite, have been subject to in-year review by CLT. We are not proposing any changes to the policy presently, but it is brought to both committees on an annual basis, at least, for their consideration, with a request to endorse the policy. The report also summarises progress on implementing actions within our 3-year risk strategy, which was approved by SRPC in July last year. This has included re-establishing the corporate risk group, emphasising the reporting of risk in new committee report templates, and ensuring clear guidance on risk management is included in the new project management framework within the Council. We have also refreshed and updated the strategy for the current year and added in some new actions. So full details of that can be found at Annex C to the report. And then finally, we're also presenting the current corporate risk register as Annex A to the reports, particularly highlighting the risk owner for risk 12, which was previously termed the risk of climate change, is proposing to retitle that risk, the risk that Cambridgeshire County Council is not adequately prepared for the impacts of the changing climate. That risk has been reassessed and updated in the format which you currently have before you, but it is also expected that further updates to this risk will come forward to both committees in future. Thank you, and happy to take questions.
Okay, and just before we take questions, there is a confidential appendix, which if we need to discuss, we need to go into confidential session, but I'm hoping we won't need to. No, okay, Chris.
Thank you, Graham. We are on a risk journey here, and we have made significant strides over the last few years. We moved from a risk mitigation policy to a risk management policy, and a whole host of things have been improved in terms of risk management, the vast majority of which never get to our eyes because they take place internally within management of the organisation. So far as the effectiveness of the risk management processes are concerned, of course, the journey we've been on doesn't finish here. As is stated in the report, there's still further to go, and I very much welcome that. But one thing which isn't mentioned in the report, and I think we've now got to a level of maturity where it is appropriate for it at least to be on the agenda, is an effective risk appetite strategy. Now, what we have done up till now, and I'm not saying it was wrong to do, you've got to have your priorities in terms of how you improve your risk management processes, but we've been willing to accept a risk appetite, if you're using the matrices of whatever the number is, 16, and we've just been willing to accept that as being the risk appetite. But now that we have a more mature risk management process, really that is no longer sufficient. We need greater granularity, Chair, in terms of our risk appetite. For example, and this risk granularity, by the way, should be in the ownership of members rather than officers, because we're the ones who should be determining what we think appropriate risk should be, or risk appetite should be. I'll give you an example, and just making up two risks for the sake of my argument. If we had a risk as to whether or not we got 80% of all staff returning their staff satisfaction forms, and if we had a risk saying that we wanted no child to be killed or seriously injured through our actions or neglect, we'd have a different appetite for those two risks, quite naturally. Now, the time is coming and I'd like it to be at least placed on the theoretical agenda now. The time is coming when we should be looking at our appetite for different risks, accepting that we have different appetites for different risks. So I'm just placing that on the record now, and wonder, Chair, if you would agree with me in principle that we should be looking at that without trying to rush it. I'm not saying it has to happen next month, far from it. But in the direction of travel that we're going, which I very much approve of, and the direction of travel we've come from, I'd say that is one of the next steps for us to go down, which I must admit isn't actually mentioned in these reports at all. Thank you, Chair.
Any thoughts about that, Michael or Mairead? In a way, the fact that the matrices have got a risk appetite, you've already doing what Chris is suggesting. Whether somebody has sat down and compared each risk and thought, is that one actually worse than that one, as the two examples he's given? I don't know, but what are your thoughts on this?
So we have we sort of define risk appetites within the risk management policy at a very high level as being a risk appetite of 16 across the board. And the intention of that is that it's quite a simple, easy to remember number that applies, which allows staff hopefully to go, oh, it's 16 or higher. I need to make sure that I'm escalating that to ensure that senior managers and members have that awareness. What we do have within our risk management toolkit, which sits below the policy and it doesn't form part of the formal policy, but is the guidance that we are encouraging staff to refer to, is a series of risk appetite statements. And they do set out the council's attitude to different aspects of risk. So financial risk, safeguarding risk, reputational risk, etc. That's something that we could bring to, I believe there's going to be a risk management workshop with SRPC. We could bring those statements to that workshop for a discussion with members on those statements. They have been discussed and reviewed recently by CLT, and there is certainly an appetite, to make the joke, to continue looking at those and review how we express that more granular view of risk appetite across the organisation. But also, I think there is that balance of trying to keep that simple message to staff of at 16, it should be escalated up. So I think we're trying to balance having a clear approach, particularly bearing in mind that our risk management approach is still being embedded with many staff, while developing some of that granularity as well. Slightly more behind the scenes, I suppose, currently, but it's something that we are looking to do.
Now I look at it, I see what you mean. I think it's 15, isn't it, rather than 16? It's 3. It's likelihood of 3 and consequence of 5, which is what they all seem to be. But anyway, it's all the same number, and probably there should be a difference in appetite for different services. And there was something about climate change where I can't remember now precisely what that was, but that one did stick out to me as being something slightly odd. Go on, Chris.
I possibly made it all sound much simpler than it really is. I fully appreciate, as Mairead suggested, it is all extremely complicated and it's all interconnected. But when we look at our matrices, our risk matrices, we see green, amber, and red. And that green, amber, and red bears no relationship to our as members' appetite for that particular risk. And as you've just said, Chair, it's easy to see that we as members would regard certain risks as having a lower appetite than other risks. Now, as I said, I'm not suggesting this is going to take place next month, very far from it. But I'm trying to flag it up now that this is a logical way for us to move forwards as members, so that we can take greater control of the appetite for risk for this council and to separate out the different types of risk and the different appetites that we have. Thank you, Chair.
No, I agree with that, Michael.
Whilst not wanting to prolong this, Chair, I do agree that evolution is needed. I think it's the advice that goes with that in terms of the setting of that appetite. So we could have an appetite that brings significant financial cost that we can't afford, which then knocks onto another risk, and it does all of a sudden become complicated. So the awareness and the understanding that's needed to set the risk appetite is the crucial point here. And I think that evolution in education is critical in terms of setting that, and that's where I think there has to be the officer's view in terms of that level of appetite.
Chris.
Our Section 151 officers' words are, of course, extremely wise, but it actually misses the point to some extent, because I believe that if we were collectively, corporately, as members, to look through the different risks and to determine what we believed was the appropriate appetite for risk, we would find that in a number of areas where currently we are in green, we would be in red. And that is not to say that we shouldn't do it just because of that. It is to say that it more realistically represents how reality is for us, as opposed to what our appetite for risk is. Then we have to evaluate, as you say, what are the costs involved in trying to get closer to our appetite for risk, knowing that in some cases, no amount of money could get us down to our appetite for risk. So the evaluation of it's important, but we shouldn't, and I don't think that the Section 151 officer is suggesting this, we shouldn't shy away from evaluating our appetite for the individual risks, just because we will find that in some cases it gives us some uncomfortable answers.
No, I agree entirely, and I've now found the bit about climate change. I can't understand why T, which presumably stands for target, which is like risk appetite, is only 8 when everything else is 15. But anyway, Sarah, you were nodding enthusiastically. Is there anything you want to add at this point?
No, I just thought it was a useful discussion, and I think, just agree from from what we see, and my expectation would be that I have seen that not just across local authorities, but certainly elsewhere within the public sector, that you may end up in a situation where you are outside of your risk appetite. But I think actually understanding that and being clear that you're in that position and that you're doing all you can is actually quite important, and particularly in the context of the need for further funding, etc.
Absolutely. Okay. So a useful discussion, and hopefully we can feed that back through internal audit to SRP and others for them probably to review, rather than us to review their risk appetite and so on. Okay, thank you very much. So we have noted and commented on the annual risk management report and endorsed the risk management policy and updated risk strategy. The final item is the committee agenda plan. Rashinda, is there any updates to the agenda plan?
No, Chair, none.
Thank you, everyone. I think that's the end of today's meeting, and the next one is on Thursday, the 31st of October. Thank you very much. Is it Halloween? All right, well, enjoy the summer holiday. Thank you very much.